Welcome everybody. Thanks for joining us this morning. I'm going to kick over to Stu to go through the latest quarterly results for about 15 minutes, and then we're going to have time for a quick Q&A. If you could just use the Q&A button or the chat button and submit your questions via chat, and we'll have a crack at getting through all of them, but we've got quite a few people online, so if we don't get through all of them in the time, I'll endeavour to get back to you offline. Over to you, Stu.
Thanks very much, Emma, and thanks everyone for joining Strike's very first quarterly results and financial call, and g'day from WA. So moving into this quarter, the second quarter of financial year 24, the company made considerable amounts of progress on its strategic endeavour to being the lowest cost and lowest carbon producer of gas in Western Australia. And we can see that here in the quarterly highlights. Not only did we produce a gross total of 1.9 petajoules equivalent of gas and condensates to a gross revenue of just under $15 million, but we did that at an incredibly low 51 cents a gigajoule production cost, which is an amazing achievement to be able to run our business at that cost profile, given that this was our first quarter of full production results. We had to dust off the P&L this quarter for these results, and it's been a pretty exciting one. Lots has been going on, not only at Strike, but also in the West Australian energy system, which I'll endeavour to take you through very quickly. Also, highlights for the quarter include that we reached nameplate capacity at Walyering at 33 terajoules a day and 265 barrels a day of condensate, and subsequently during the month of January we have actually run the facility for a considerable period of time at 34 terajoules, and we are very excited to be able to ramp up that to nameplate capacity, subject to being able to put the gas into the various parts of the market. As part of being able to do that, Strike and Alinta signed a firm gas sales agreement for 3.4 PJs starting from February of this year. And then also the quarter was highlighted and earmarked by the successful drilling of the South Erregulla 2 and 3 wells. We released the results of 2 in the last quarterly, but with 3 coming in with 13 metres of net gas pay, as well as a successful appraisal of the CO2 storage reservoir in the Jurassic. We signed 42 PJs of foundation gas sales agreements with both South 32 for the Worsley Alumina Refinery, as well as Perth Energy AGL, and that should support the development of the phase 1 of the South Erregulla project. That project itself received its primary environmental approval during the quarter, and we were very well progressed on the various engineering and cost aspects of working with both our modular service provider Enerflex, as well as taking a proposal from Australian Gas Infrastructure Group for a build, own and operate of both the pipeline and the gas plant. And finally, during the quarter, lots going on. We completed the acquisition of Talon Energy on the 31st of December last year, which consolidated 100% of our ownership at the Walyering gas field, where we've got some really exciting developments released in this quarterly, and I'm happy to take you through those. And finally, as usual, the company finished very well funded with $114 million of liquidity on hand. That was including after paying down $6.6 million of debt in the quarter to bring our Macquarie drawn funds down to a low $19 million. The financials very much speak for themselves. With only one source of production, they it's quite easy to look through these financials to the performance of Walyering. The quarter was made up, as I said, of 1.9 petajoules equivalent of gas and condensates. That was equivalent to about $13 million of gas revenues and just shy of $2 million of condensate revenues, $8 million around prior to Strike's consolidation with Talon. Average realised gas price for the quarter was around $7 Australian dollars a gigajoule. That was slightly lower than the previous quarter due to the fact that our primary firm gas sales offtake to Santos is US dollar denominated, and we did see some weakening of the US dollar during the last quarter. And we also produced quite a lot of gas through our as available sales into the very short term markets. That that moves us on to our capital expenditure, which was predominantly around the South Erregulla drilling. We spent around $30 million at South Erregulla in the quarter. 2 appraisal wells, South Erregulla 2 and 3, that were successful. Those wells will be completed as future producers and cost around $30 million, as I said, which is the drawdown of the cash in bank. Those 2 wells will be flow tested very shortly. We've just landed the completion of South Erregulla 3. The hydraulic workover unit is moving off the well, and the mobilisation of all the flow testing equipment has occurred, and we expect to be flow testing those wells very shortly. In terms of our liquidity position, again, we remain very well funded. We're expecting to see revenues and earnings rise next quarter as firm offtake at Walyering increases. However, we finished the quarter with about $114 million, $47 million or so of undrawn debt, with $67 million of cash. And as I said, we actually paid down $6.6 million of debt in December. So the company is very lightly leveraged, which is really exciting as we move into the development decisions at both South and West Erregulla as we come up to the coming quarter and in the rest of the year. But some of the bigger news from our Walyering operations. This quarter, we received the reprocessing of our 3D seismic. If you cast your mind back, the Walyering 3D was shot and processed in late 2019. There has been considerable developments in technology of seismic processing since then, and the product that we've received from our reprocessors Earth Signal is astounding in terms of its increased resolution and the amount of structural closure that we are now mapping and identifying as part of the greater Walyering field. And that has created an opportunity for the business to relocate the bottom hole location of Walyering 7, which we expect to take the rig back from Mineral Resources in March and spud that well shortly thereafter. Walyering 7 will now be drilled into a very attractive closure to the northeast of Walyering 7, as opposed to due west of Walyering 6, which was before. We believe that the large north-south faults that run through the map that you can see and the structural map that you can see there are controlling reservoir quality, and Walyering 7, therefore, if it performs similar to that of Walyering 5, we are looking forward to being able to increase the production capacity at Walyering. And as a result of the prospectivity that we see in these maps in the seismic now, we've actually commenced the work in order to be able to open up more than 40 terajoules a day of production from the Walyering facility and open up new markets in higher priced parts of the WA domestic energy system. So that's very exciting at Walyering. As I previously went before, the field produced at around 20 terajoules a day on average. We at times produced in excess of 20 TJs a day, up to 33, but that was inhibited throughout the quarter on a consistent basis due to downstream maintenance. The Parmelia gas pipeline is the oldest pipeline in Western Australia, and Walyering is the first new gas field connected to that pipeline since the late 80s, early 90s, when Bahara Springs was connected. As a result, the pipeline is running at pressures now that it hasn't seen for quite some time, and people are looking to reconnect their laterals or to fix up their inlet points in order to be able to take more gas down the Parmelia. And we're working with customers at the moment in order to be able to put as much gas down the Parmelia as the field will allow. And that was early in January. We ran the field at 34 terajoules a day until, unfortunately, one of those downstream issues reoccurred. But we performed at 34 terajoules a day for more than 7 hours without any issue in the plant or in the upstream. And so we're excited to be able to push more gas into other customer nominations going forward. Those other customer nominations include the 100% take or pay contract that we have with Alinta that starts in a few days' time, and that should see firm gas sales increase over the coming quarter, which will not only increase the revenues generated from gas sales for the quarter, but it will also further reduce our production costs as our fixed costs are divided against a larger production base. Now at 100% for the field, we're looking forward to drilling Walyering 7, as I said. and that's probably one of the big highlights coming up. We'll also use the seismic to conduct a reserves and resources review, and we've kicked off and commenced that work with risk already. Moving to our other development projects, South Erregulla, we, as I walked through in the highlights, drilled the South Erregulla 2 and 3 wells, producing positive results across the field to the north and the west. Our phase 1 project has received its primary environmental approval. We've signed our foundation gas sales agreements, and not only did we close out our Enerflex feed and proposal, but we've also initiated a build, own and operate proposal for both the pipeline and the plant from Australian Gas Infrastructure Group, so we can do a contrast and compare, looking at the way that the domestic gas market may be changing going forward. There may be alternative options for us to develop that project. West Erregulla, considerable time was spent with Hancock Energy this quarter. Early alignment has been found on both the midstream development, the size of the development, as well as the time frame to bring gas online, which will be in late 2026. The West Erregulla proposal, which has to go through the EPA due to the fact that it is being built on Crown land, went through the EPA and received its primary environmental approval. However, that was subsequently appealed. The appeal plus the Australian Gas Infrastructure Group midstream development was also appealed. However, we expect those appeals to move through to ministerial decision in the coming quarter, and we look forward to reporting out on that as and when that occurs. After that, we'll be looking to drill the Erregulla Deep 1 well, and at that point in time, Strike will have a very good understanding of the total resource reserve basis sitting in West Erregulla and EP469. That's an exciting well. It has about 275 petajoules of 2U resource, has a high probability of success at around 54%. And on success there, we could increase the reserve position at West Erregulla by a further 50%. And then in the coming quarter, and hopefully kicking off very soon, the Ocean Hill 3D seismic, where we made significant progress on both the environmental approvals as well as the land holder access. And that 3D seismic over Ocean Hill, which is a large 306 petajoule equivalent 2C resource, is one of the big value levers at Strike. We're looking forward to getting that 3D down and illuminating the Ocean Hill field, very similar to what we've done at Walyering. They're the exact same rocks, and putting down and siting an appraisal well. On success of an appraisal well at Ocean Hill, we would similarly be looking at a very fast and low-cost development to that we've generated at Walyering. However, connecting it into the DV NGP, as there's a compressor station some 4 kilometres away from the field. Major movements occurred over the quarter as well in the West Australian energy market. That not only did the spot price continue to trade at elevated levels around $9.47, but 2023 was finalised as the lowest year for gas exploration in the state of Western Australia. That is compounding the underinvestment case for energy in WA, as we see the demand and pull on our energy system from gas into the electricity network reaching to all-time highs. In November, in the previous quarter, the highest demand for electricity in the state's history occurred, and not only was it high, but it was very much higher than the last previous record, some 800 megawatts. At one point in time, 56% of Western Australia's electricity was being generated by gas, with the remainder really being generated by distillate or diesel and coal. So for the state to continue to retain its commitment to exiting coal-fired power by 2029, we're going to need to see a significant increase in potential gas supply. And that was highlighted in the release of the Gas Statement of Opportunities during the quarter by the AEMO, which shows that the state will move in and out of deficit throughout the rest of the decade and into a considerable deficit as the state continues to commit to exiting coal-fired power, and we need more gas in our electricity system. Strike's very well positioned and well placed to play a meaningful role in this space, and that deficit has triggered the review from the state government into the domestic gas policy. It's also been met by significant rhetoric from the West Australian Premier, Roger Cook, who has said that the Perth Basin will need to become a substantial producer of gas throughout the rest of the decade, and we need to potentially accelerate and increase the size of those developments. And he is looking at the policies that currently govern the way that we are able to sell gas, and seeing if there's a way to stimulate larger, sooner developments with more reserves additions on a more regular basis. Some of that rhetoric has said that he will be looking at the LNG export ban, and that he expects to make a comment or report out on that in the next few months towards the first half of the year. Sadly, however, we did see a destruction in some demand for the quarter, where the Alcoa alumina refinery was announced that it will shut down in September. That will reduce the market between 3 to 5%, or around 55 terajoules a day. You can see our analysis in the chart down the bottom right-hand side, which shows that it doesn't necessarily negate the deficits that the AEMO are forecasting, and we expect the market to remain in incredibly tight balance as a result of all of that. So that really closes out the highlights for the quarter. That was a quick 15 minutes on what we've done and how the landscape for Strike is potentially changing. We're keeping some of our options open as we continue to appraise and assess our upstream fields, and we're looking forward to making some development decisions off the back of the domestic gas policy announcements in the coming quarters. So I'll hand back to Emma for Q&A. Thanks very much.
Cool. Thanks, Stu. We've got a few questions that have been coming through. The first one's from Matthew Walker. He's wondering when we're expecting to get the rig back from MinRes, and whether the rig sharing will continue post the current arrangements, given that MinRes now have their own rig. Is there any chance of us getting more drill slots?
Thanks, Matt. Good question. And first of all, what I would say is the time it takes to prepare, not only technically, but then also to design, procure, and get a well approved in Western Australia is not a small feat. And particularly if that well is located on Crown land or versus to a farmland where you may or may not have a sympathetic landholder. What I can see is that Strike and Mineral Resources are committed to this, to the 970, and we're moving through our proposals. I think there's going to be a bit of ebbs and flows in that drilling program, where maybe a slot or two becomes available into the Strike program. As you pointed out, Mineral Resources have acquired the Lock 400, where they're going to be looking to put some of their wells away with that rig, and that might increase rig time availability for Strike on the 970. Yet to make any formalised decisions on any of that. We do have options in our portfolio: Walyering East, Walyering 8, Ocean Hill 2, once the 3D seismic has been acquired and interpreted. And so there's some really attractive opportunities there, which would obviously be subject to the continued performance of the Walyering field and the generating of earnings there, being able to reinvest in new appraisal of reserves, increasing production, and ultimately appraising other fields. We expect to get the rig back, as I said, in late March to drill the Walyering 7 well, after Mineral Resources has completed Lockyer 4. I believe they're drilling Lockyer 5 now still. Back to you, Emma.
Yeah, a little bit of a follow-on from that from Scott Ashton. How are landowner relations in Perth Basin, and have there been any hurdles or difficulties re-access to land for drilling or operations?
Thanks, Scott. Landholder engagement's been very positive. We generally have a very good relationship with all of our landholders in the immediate vicinity of our operations, noting that West Erregulla sits on Crown land and we own the farm at South Erregulla. So, Strike can be a fairly sympathetic landholder to itself when it's required. However, we have just come out of what was a challenging year agriculturally for the wheat belt. And so, what Strike does represent is a great supplementary income to landholders, particularly post-harvest, for seismic acquisition and the land access fees that we pay, or for drilling wells and siting well pads on people's farms. And so I think Strike is seen as a symbiotic part of the Midwest community. We're not looking to force our way onto farms during growth periods for crops. And so working hand in hand with farmers, I think that, I'd say that Strike is a very well received and well liked operator within the area. Thanks, Scott.
Cool. There's one from Damien Woods. He started off to say that your mow is exceptional. And then is wondering if you can explain some of the downstream constraints on the Parmelia pipeline.
Yeah, thanks, Damien. New Mo, new me. So the constraints down the Parmelia gas pipeline, as I said, the pipeline's been running in around 961 psi or so, which, when you look at over the Dampier to Bunbury natural gas pipeline, that runs at 14 to 1500 off the top of my head, or maybe slightly higher. So a considerable difference in pressure regimes, and that's just due to the amount of people putting gas into those pipelines and the capacity and utilisation on them. The Parmelia hasn't had a field connected to it since Bahara Springs, which, a lot of people will remember Eric Streichberg did back in, I think, 1991, was when Bahara Springs came online. As a result, downstream customers have not necessarily invested in maintenance of their inlet points. There hasn't been as much pigging of the lines historically as there may have been on the DBNGP. And as we find, putting in very high pressure gas from the Walyering gas field, not only are we pressuring up the lines, but we're also exposing maybe some of those downstream maintenance issues. And I think customers are now excited to see a new producer come into the market, particularly one with a domestic focus like Strike, and they're now investing the money in the maintenance of their inlet points in order to be able to make sure that they can take as much gas as Strike can produce. And I expect that to see an increased throughput of the Parmelia gas pipeline over time. Thanks, Emma. Thanks, Damien.
Cool. And a little follow-on from that from Scott Ashton again. What is actually involved to increase the Walyering to 40 TJs a day? Is it adding compression, debottlenecking of the plant, and have you considered liquids handling constraints?
Thanks, Scott. So last bit first, I think we'll be running at over 40 terajoules a day. We'll be doing a condensate lifting almost every other day. So, every second day, which is a pretty exciting amount of condensate production, and may actually change the way that we look to monetize our condensate, given the volume that we would have available in order to monetize. Maybe taking our own tank somewhere in Western Australia might do that, and that would generate a significant uplift in the return profile of those condensates. In terms of the investment in Walyering, certainly we need a more upstream capacity. So the drilling of Walyering 7 is the first and foremost important part there. Additional 1P reserves is also helpful from a gas marketing point of view, and being able to have the confidence that we're not over contracting ourselves at the back end of our existing marketing arrangements. And then in terms of the midstream, the plant, as I said, we haven't found the upper limit of the plant, noting that our safety case for running the plant is, I think, sitting at around 38, 39 TJs a day. So we will need to review our safety case, make sure that all the pieces of the equipment that we have there can continue to go. But I expect to be able to take the field in excess of 33 terajoules a day with only desktop work. If we want to take it permanently from 40 to somewhere between 40 and 50, we may be looking at a second condensate handling train or liquids dropout train, and then coming back into the export pipeline. We are looking at very small tie-in cost for Walyering 7, and we wouldn't be needing any additional infrastructure for that for Walyering 7's production. But if we do have the success at places in like Walyering East or Walyering West, we may want to put some investment into the plant and to be able to reliably perform between 40 to 50 terajoules a day. Thanks, Emma.
Cool. We've got one from Tony. He's wondering whether Strike have had discussions with Hancock reutilising the precinct area on South Erregulla for building a JV gas plant for West Erregulla.
A lot of that's confidential in nature, but what I can say is the precinct does represent an excellent place to construct a gas plant. And that's because not only will South Erregulla very likely have been FID'd prior to that of West Erregulla, given West Erregulla is still going through its primary environmental approval process, and there will be an export pipeline already connected to the DBNGP in place. But with the access to the precinct, not only will there be the opportunity for substantial renewable tie-in to reduce the amount of gas consumed in electricity generation for the plant, but just from a constructability point of view, there's more space, more laydown area, and also a lot more road access into the area, given that it's a farm that has been operating for quite some time, as opposed to carving out a new piece of land inside the existing Crown land that sits over the top of West Erregulla. It's something that we continue to believe is an attractive proposal, and we'll be working with government and joint venture partners towards a West Erregulla FID in the second half of this calendar year.
Cool. So that's kind of answers a bit of the next question from Stuart Howe and a few other people wondering what the timing for the NSAI resource and reserve update is looking like, and the timing around the phase 1 FID for South Erregulla and the flow testing results.
Yep. So we expect to start flow testing very soon, given that we've just completed the landing, the completion at South Erregulla 3, and the hydraulic workover unit has commenced its demobilisation. That allows us to bring the flow testing package on, perforate, and get on with it. The NSAI work has commenced and is ongoing. It's probably quite prudent for us to include the flow testing information into that process. And as a result, I would expect for both the flow testing results to come out within a month, and then the NSAI work to come out subsequent to that. And that all leads us in to really understanding what is our resource and reserve base, what's the appropriate way to take the development forward, as well as see some of the results coming out of the domestic gas policy review, and whether any of those changes would intimate or indicate that there should be a rethink of the potential development strategy. It would be, as I said, prudent to make sure that we understand the full landscape before making commitments that we can't undo.
Cool. Declan has one around what the primary reason for West Erregulla first gas now being late 2026 when it was originally 2025, and is this JV alignment on timing or construction timing or a macro fit?
Thanks, Declan. The timing of gas is in relation to probably the reality of the time that it takes to construct things in Western Australia at the moment. It continues to be a challenging construction environment with access to trades as well as to construction crews. The timing in late 26 is aligned between Strike and its partners by virtue of their own gas needs, and for Strike's ability to manage its balance sheet appropriately in order to make sure that we're looking for the biggest return to equity as possible.
Cool. And we're pretty much nearing the end. We've got a couple of minutes left. So we'll skip back to Walyering. Declan's got another one on Walyering 7 was originally targeting the 33 PJs of 2C. How does the new bottom hole target compare? And are all of those highs looking geophysically like they have good reservoir targets?
Thanks, Declan. What I would first and foremost say is that a potential increase in, just back to your previous question, at Walyering, an increase in reserves at Walyering would more than offset any sort of minor time shuffling of our other Erregulla projects. And you can see just how the margins are at Walyering given the very low cost. In terms of the Walyering 7 location, as you're quite right, that 2C continues to exist at 33 petajoules, but the new Walyering 7 location is in the same sort of fault compartments as Walyering 5. It has a similar total area of structural closure to Walyering 5. We haven't produced a 2U or 2C or 2P number over that. We're currently engaged with risk around discussions on that. If you recall, Walyering 7 to the west was originally going to be drilled into a compartment that had produced gas from Walyering 1. Walyering 1 produced around 13 million standard cubic feet a day, or that would have equal about 14 TJs a day, whereas Walyering 5 at max rate produced in excess of 75 million standard cubic feet a day, or around 82 terajoules a day. So we do believe that those very deep down to source faults that you can see running through that map are controlling reservoir quality. Walyering 5 certainly looks like an anomaly when you rank it against every other Jurassic well drilled in the Perth Basin. And we believe that following the structural closures along those faults, you can see up from Walyering 5, and then further Walyering East and Walyering Northeast. Those look like attractive structural closures. And I don't want to make a comment on the geophysics because I haven't looked at it with the team just yet, but it definitely is, I'd say very much increased prospectivity across the entire L23 and EP447. So an exciting increase for strike potentially coming.
Cool. Thanks. That's pretty much covers everything. If anyone has any further questions, you feel free to reach out. There's a couple there that I can take offline because they were sort of already answered in case you missed it. This has all been recorded as well, so we'll get to posting that on our website soon in case you missed the start.
Thanks everyone. Have a great day.